I suppose the direction of travel upwards was not at all surprising. I mean, that's been widely flagged and for some years. And we've known that silver's been in short supply relative to the industrial use of silver. So it was only a question of time before the above ground silver stocks declined to a level where the price had to be forced higher. I think what's surprised a lot of people is the speed at which it's gone. And I went in on Monday to Degussa in Geneva, which is a major gold and silver dealer in Switzerland, and was turned away. They said, sorry, the demand is so high, we're only taking bookings. The earliest you could have a booking is Thursday. And I said, well, what's going on? Are people selling or are they buying? They said, no, it's all buys. The gap which has opened up between the price of silver in Shanghai and the price of silver on COMEX. Now, the two have traditionally traded within 50 cents or a dollar of each other, and that premium has gone to, at times, $7, $8, $9. So it was, I haven't got it. I think today I saw it was down at $5, but it's still 5 times the normal level. So that what that means is the silver isn't there for people to arbitrage it away. The fact is, I think that confidence in the governments getting their debt levels under control is diminishing. There was a little bit of hope when we had the Department of Government Efficiency, which looked like it might be starting to make some inroads until it suddenly stopped. So realistically speaking, I think we're set for ongoing expansion of debt around the world, Western world in particular. We're seeing the interest expense rise because we've come out of a very, very long period since 2008 of hyper low interest rates, got up higher interest rates. Now we're coming down again, but we're still well above the levels of interest that were being paid in that sort of 10, 15-year period after 2008. And what that means is a lot of government debt, as it starts to mature, has to be rolled over, along with the new debt, which they need to take on to fund current spending, and it's all being rolled over at higher interest rates than the interest rate being paid on the maturing debt. No, I've never been turned away from buying gold, whether it be from the banks. There's also a gold counter at UBS, or from Degussa, or for that matter, there's another place I go to sometimes. Not one of them have ever been so busy that they said, we're only taking appointments. It's never happened.
Silver is exploding, hitting record highs near $81 per ounce as of early 2026, after a 140% plus surge in 2025. This panel of experts explains the powerful forces driving this boom: a severe, years-long physical supply deficit, skyrocketing industrial demand, especially for solar panels and EVs, and a growing retail buying frenzy causing dealer waitlists. They analyze whether this is a bubble, comparing it to the 1970s bull market, and set bold technical targets near $96 per ounce.
Consumers of silver, the big auto companies, the solar panel companies, they need to get their hands on silver now. They've been working on what's called just-in-time supply chains, and suddenly they've realized that's a bit too risky. We better have a month's supply or 2 months supply. And now they're all rushing at the same time to say, we want to be first, make sure we don't have to shut down our production line. We can't, it doesn't, if you've got an ounce of silver in a car, and it's something like this, between 0.6 and 1.8 ounces of silver per car, we're talking about the difference in the car price of going from $50 for an ounce of silver to $100. We're talking about an extra $50 on the price of a car. They're not going to shut down the production line because it costs them more for the silver. So there's this rush going on by manufacturers to say, we're not sure if this silver shortage is there, but we've got to get it, and that's pushing up the short-term price. China has brought in some regulations which require export of silver to obtain permission before the silver is exported. But what that does mean is the export of silver, which was they were a net exporter of silver, the export of silver from China to the West is going to be less going forwards than it has been. Well, I think one of the interesting plays going forwards will be what the United States does about the strategic minerals. What that does is it opens the door for government agencies, such as the military, to stockpile silver. Now, the military, going back to the 1950s and 60s, did own many years' worth of supply of silver. I don't know what they did with it, but by all accounts, and I've tried to establish this, I've got the answer that it's all gone. It's all gone. So I don't know if it's in use by the military. People say it is in use by the military. But of course, the bigger use in the United States and other countries is the automotive, electrical, and solar panel industries. And we're not going to have any less of any of these things. So the silver demand is only going to go up. And of course, it is critical to the continued production of these things.
I've long said that I think the 1970s bull market is the best analog for this current bull market. And I think we should expect to see an amplified replay, not a muted replay of that 1970s bull market. So bull markets do surprise to the upside. I do think we've got much higher to go over the long term in silver. However, this move up towards 80 really has caught many by surprise, including myself. I did not expect this fast of a move. However, I've been saying that on that 4-year cup and handle pattern in silver, a lot of people have seen that. It's been across the internet. Once you break that $50 level, the next measured move target is 96.
Crucially, they discuss why new mine supply can't fix the shortage quickly, and how governments labeling silver a strategic metal could lead to stockpiling and export restrictions, further squeezing the market. The conversation also covers gold's role as a debt crisis hedge and provides actionable strategies on how and when to buy, hold, and potentially take profits in this volatile but potentially historic rally.
I don't think it makes any sense to go all in at once. Otherwise, you might find that the day after you bought it, there's a big dip. So the way to play the game is ease in gently, buy a little bit now, sit on it, see how you feel, buy a little bit more. Maybe you'll get it cheaper. Maybe you'll pay it more expensive. But it doesn't matter whether you pay either more or less. What you're doing is ensuring you will not be the person who paid the highest price ever, because you'll have paid an average of the prices over a period of time. What would hurt really if you go in and say, I'm putting all my money in silver or gold now, and then the price starts to drop and you've got to wait a month or 2 months or 3 months or 6 months for it to get back to where you paid. And that can be really, really distressing and cause people to panic and say, I made the wrong decision, get out. But going in gradually, well, then you won't pay the highest price, whatever happens.
So for me, like sometimes we're talking to people who have zero allocation. And if I'm talking to that person, well, I would say, hey, I would certainly be, dollar cost averaging and getting some exposure here despite the big run. Now, some people, I know there's people out there who have virtually all of their net worth in silver and gold. To that person, I would say to consider rebalancing.
But if all you're trying to do is get in and get out, paper is the way to go. But on the other hand, everybody, absolutely everybody, should have some physical as the plan B. It's not anybody's liability. It's out of the financial system. And I think in the world we're in, you need to have some assets, that would include your house, of course, but other assets which aren't part of the financial system, which are genuinely yours, which you can touch and nobody can take them away from you. And gold and silver are a way to do that. And that's not the sort of thing you should be selling. So, but if you're minded to sell, you've got paper silver. One of the rules I have for everything, and that includes equities or whatever you like, but it applies to just as much to paper and silver ETFs and so forth, is when you feel the urge to sell, take a little bit of the profit off the table. And I personally tend to leave the original holding and some rolling. And I know too many people who see a surge in the price of something and say, well, I've got to grab this price because today's price is an accident and last week's price must have been the right one. I think there are 3 other possible outcomes to, inverted commas, solve the debt problem. One would be financial repression. By the way, all these outcomes are very good for the price of gold. So financial repression is where you have heavy capital controls and you tell people what they can and cannot do with their money, and you enforce that. The second possibility would be one where they force people to use another kind of money. And I'm thinking along the lines of central bank digital currency here for all your transactions. And obviously, on the day one, at least, you'd understand that you can move your money freely between the money in your bank and the central bank digital currency. But there's a risk that may be blocked or limited or controlled in some way. And if they start to do that, that basically means there's now a second currency in circulation and you can't deploy or use the currency in which the government is repaying its debt. So it's repaying its debt in a currency which can be used in day-to-day transactions.
I do. Yeah, I think that's coming, unfortunately. And I think a lot of people potentially here in the United States have put their guard down because of the Genius Act and perhaps, their man is in office. And, I would say that the forces behind this central bank digital currency push are are still in play. And I think that's sadly coming. And I think, the concern there go far beyond financial financial ramifications, but more about control. The government's going to be able to, if this comes to fruition, track your every purchase. Social credit scores, all of these kind of things come into play with BDCs, and that's just yet another reason to hold physical silver and gold stored outside of the banking system, because they're not part of that. They're not tracked.
Well, I was in wealth management at the time, and I read the book called Silver Bulls, I think was the name of the book, about the Hunt brothers, and they were royally screwed over by the exchange, in my opinion. That's me expressing an opinion, because basically the exchanges brought in Silver Rule number 7, which basically said you can sell your silver, but you can't buy any more. And you can't take delivery. So they had a one-way ticket to sell and no choice. But of course, that because they'd borrowed money to buy all this silver, it effectively bankrupted them. I think the reality now is it's getting. I mean, my experience, it's getting harder to buy. I mean, the fact they had to take an appointment for Thursday on Monday shows you how long the queue is. They said, look, we can't have all these people turning up in the waiting room. I used to go in there, and every time I went in, there was 1 or 2, maybe 3 or 4 people there. But obviously, it's turned that 1 or 2 has turned into a bit of a crowd now. I mean, I think a lot of us kind of were hoping we'd get to the $50 mark at some point, and probably we'd flag that for next year. And we soared through it at the end of literally the last month or two, and at an incredible pace. I think it's what's happened is easily explained in terms of the shortage of supply of silver and the demand going up. We've had the United States declare that it's a strategic metal. We've got fears about import taxes coming into the United States on silver. That's not actually happening, but it's obviously has been a fear in the year. And we've got a growing level of distrust generally about the money we've got and what's going to happen. And I think maybe it's going under the radar screen a little bit, but the introduction of the digital euro in Europe is making people think, what's my alternative? The fact it's just gone up, means everybody's making a mistake because it's going to go back to last week's price. So they immediately rush to sell to grab that new price, and a week later they're regretting it like anything, because as we saw, silver. A lot of people thought, okay, 66 silver about, and now where are we? We're eyeing 90. It's 81 or something like that now. So if those people who did rush to get out last week, and there were plenty of them, because a lot of people write to me about this, if they would have just sold some of their silver, they'd still be in the game. They could feel disappointed they'd sold a bit, but at least they'd still be in the game. And if it went down, they'd be happy they sold a bit.
So I'd be interested to hear Clive's thoughts on if you experienced that last part of the 1979-80 bull market. But I like to say no one's going to time the exact top. So think about that. And every precious metals investor should sub plan on what is your exit strategy. When will you push the sell button? When will you take some profits? Knowing that you are not going to time the top. No one's going to do it. So the way I do it is I have a certain allocation that I intend to have as a generational insurance policy for my children and children's children. In other words, I'm never going to sell it. Then I've got a different bucket plan to sell. And with the dollar being an ever changing unit of account, it is not based on price targets measured in US dollars or any other fiat currency. Instead, it's ratio based. So I have certain exposure that I intend to trade for other cash flowing assets, namely real estate and dividend stocks. And I track those ratios very closely. Silver versus real estate, silver versus a dividend ETF that I track, a dividend fund that I track. And when I can swap some metal for those cash flowing assets at predetermined ratios, I will do it. And having a plan ahead of time will take some of the emotion out of it. It's always hard to push the sell button, but having a plan ahead of time makes executing your plan a little bit easier.